Just think for a moment. When you invest in a stock, what are you really investing in? Are you investing just to get a share of assets, cash, product, maybe a share of intellectual property, or the processes? No, seriously, think about it. Well, what you are actually investing in is the management of the company and its ability to deliver consistent results. How it will steer the company during highs and lows and make sure that the results are delivered quarter after quarter. In this video, I will cover the role of income statements in understanding the performance of the company, but I don't want to create another dull video on this topic. I will therefore include some real life scenarios that people observe day in, day out in the market. For instance, why does the stock price show drastic moves after the announcement of results? If the company sells more products, can it still end up in a scenario where it has less revenue? Or if you want to increase the profit of the company, can it only be achieved through cost-cutting measures? So I'll answer these questions throughout this video. Please continue watching and subscribe if you like the content. So let's get back to our topic. Why are we even interested in income statements? For this, let's take a step back. Remember, we said that we are really interested in understanding management and its consistency of results. And there is no better way of doing this than reviewing the financial performance of the company. And luckily, we have a range of reports that are published regularly by the company. These include income statement, cash flow statement, and balance sheet. And together, these financial reports will cover a range of very vital information such as revenue, expenses, cash flow, asset, liabilities. And all listed companies are legally required to publish the results so that their shareholders can be regularly updated on the performance. There is one really important thing to know about financial reports, and that is that a single statement belonging to a single period doesn't tell us anything. Please remember this. What we are looking for is a trend of results, because this is what illustrates the consistency of performance. Let's begin our journey of understanding an income statement. Let me begin by providing the most basic visualization of an income statement. Let's assume there is a company that has certain amount of earnings. In order to run its operations and other elements, this company would also incur a whole range of expenses. If these expenses are less than the earnings, then it means the company's operation is in profit. And on that profit, the company will be expected to pay tax to the government. By deducting expenses and tax from earnings, this will provide us with our net income. This is as simple as that. This is the entire concept of income statement. While we'll go in further details, but if you get this, that's it. So basically, every time you see an income statement, you're looking for earnings, you're looking for all the various expenses, and you're looking for the component of tax that was paid, and if the company generated a net income or not. Time to visit our first question. So why does a stock price show drastic move following the announcement of results? As I mentioned, these results are not standalone but a part of a trend. And as a trend exists, there are people who are forecasting for this trend. And these are people who are professionally doing this and specialize in specific sectors. Therefore, their forecast is much more meaningful than us, because they are on top of a range of news. They understand the company, they understand the sector, they understand the challenges faced by the industry, and a whole lot of macro indicators. And as Benjamin Graham said in his book, The Intelligent Investor, the biggest challenge with a short-term forecast is that the Wall Street considers it as an almost reality. And therefore, when the company fails to meet these predictions, it means that it's not just impacting this quarter's number or this year's number, but now the entire future trend is up for review. And that's why the market starts discounting their share price. So this is one of the reasons. Another reason can be that the results are absolutely fine, but the management team shares information with investors regarding new headwinds, challenges, competition, patents, failures that raises a cause of concern on future performance. and hence the market again reevaluates if the share is now worth what it was before this information became public. Now back to our topic. Typically, this is what an income statement would look like. Both the quarterly and annual versions of this report will look exactly the same, the only difference being the granularity of information being split by quarters or presented as an annual data. The reason I'm presenting multiple years of information here is that because an annual report on one period doesn't tell you anything. You have to look at multiple years of performance to establish a trend. So what are the key items of interest in this report? The most important, revenue. This tells us the net proceeds that the company is generating from sales. The next key item is net income, also known as earnings. And finally, the information around earnings per share. There are a number of other key things that we are also interested in, such as revenue growth, net income growth, which we will discuss in later, cost of revenue, gross profit, operating income, and operating expenses. And don't forget the number of shares outstanding in the market, as they influence a range of indicators. In short, this report is really critical in understanding a range of parameters about company performance and, of course, the dividends. It's time to now visit our second question, and in order to answer this, you need to understand how revenue is generated. Revenue does come from the sale of products, but also includes any kind of discounts that the company may have offered to its customers for selling the product. And if the discount is higher than the previous years, even for the same product, it would end up with lesser revenue. Similarly, if it is forced to discount the product itself, which is, for example, Apple starts selling its iPhones at 20% discount, this would mean that even selling the same number of products, it will end up generating less revenue. And finally, not most companies have a range of products in their portfolio, which means, for example, Apple, it may sell iPhone 15, iPhone 14, iPhone 15 Plus, Pro, all these combinations. So if the market chooses to move towards a lower price product, the company will end up generating lesser revenue even if it sells the same number of products. And nowadays, the geographical location of the sale also has an impact. For instance, Starbucks may not be able to demand the same price for its product in a developing country like Indonesia as it would in US. I hope you enjoyed this section. Now let's move on with our video. Now back to our topic. Let's dive right in. The first and most important part of the statement is net revenue. This is the total proceed of sales that the company generates by selling its items or its services. And this excludes any kind of trade discounts, promotions, partnership fees, etc. that is required to generate the sale, and also any form of GST. The easiest way to understand this is the cash that the company will actually receive after making the sales. Once we have the net revenue, the next item we look at is the cost of goods or cost of revenue. This is any direct cost that is associated with the production of the product, such as materials, labor, or equipment cost, maintenance cost, anything that will help us create the product that will be sold. Deducting cost of goods from net revenue gives us our gross profit. This gives us a general sense of the headspace that the company will have available after costing for all the good direct costs and its ability to absorb any other overhead costs, R&D, etc. A lot of analysts will look at gross profit in order to benchmark the company's performance within its peers and within the industry. Then we have the overheads, R&D expenses, and other expenses that will give us an overall sense of company's operating expenses. And deducting these from our gross profit will give us the operating income of the company. The company may have made other investments to generate interest income, and there may be expenses associated to these investments. Deducting these will provide us with the pre-tax income, and finally, once we account for the tax paid on the income, we will have our net income, and this is the item we are really interested in. As you may now appreciate, the income statement gives us this entire scenario of how the company is running its operations. Does it generate enough revenue? Has the revenue been growing year on year? How about the cost of goods? Is it able to manage its costs? And finally, after accounting for everything, is the company generating net income? Well, sometimes the company may not generate a positive net income due to high R&D costs, or maybe not having enough volume in its initial phase to absorb the cost of goods, overheads, etc. And this can be natural to new startups. Therefore, it is important that we understand this entire statement and the assumptions behind each and every of these elements. And that is why it's really important to just not look at the statement itself, but at the same time also give equal importance to the commentary reported by the management as part of the financial report. And now, before we move to our final section, let's visit our last question. Can a company only generate profit by cutting cost? Well, that is the most obvious thing that comes to mind. But imagine profit not as a percent of revenue, but in absolute dollar terms. So if the company generates additional sales, even if it comes at a slightly higher cost, it may be able to turn profit at an absolute dollar value. And this is a big conflict that you will see between companies that are in the growth phase versus the company that are in mature phase and who do not have much products left, which would be playing in the premium segment. So now that we have gone through the entire drill, let's put our knowledge to test. We will search for financial reports of NVIDIA, look for the income statement, and try to make sense out of it. This information is usually available on every company's website under Investor Relations, where you can find their past reports. Usually there is a whole heap of information published as part of these reports, but remember, we are interested in only the financial specific. In this section, we can find the vital stats for the year. Even without going into the details of the income statement, we can find what we are looking for right in here. It shows the revenue, operating income, net income, and earnings per share. Okay, now let's look for the income statement. All these statements are published under the section of consolidated financial statements. Okay, so here we have the income statement for NVIDIA. This is following the standard format. It starts off with revenue, and you can work your way down, and between them we have all the other expenses. So if you start off with revenue, you can see the next item is cost of revenue, which gives us our gross profit. Then we have all the other operating expenses. Deducting operating expenses, other expenses, and income tax from gross profit gives us net income. You can scroll down further to see net income per share, which is also known as earnings per share. Something which is really important to note, and I've identified it a few times earlier in this video as well, that an income statement on its own doesn't mean anything. You have to look at the trend. And if you see, most companies, in fact all companies, when they publish their reports, they show comparison to prior years as well. And this is to give you a sense of how the results are moving compared to previous years, and this is something that management is proud of if they are delivering good results. I hope you like this video. Please take a moment to read this statement and subscribe to the channel for more videos.